Hi everyone, very good evening. So welcome to another session of CA Intermediate Cost Accounting Revision for September 2026 and onwards attempt. So welcome you all. I request all of you to please join in quickly so that we can start with the session at the earliest. So today we'll be doing cost accounting systems and reconciliation, and we will be completing our module 1 revision. Okay, I'll update in the WhatsApp group also. All those who are joining in, please like the video and let me know if audio video is clear. Okay, please let me know if audio and video is clear. All clear. Thank you for the confirmation. Clear. Thank you. So we will be starting soon in the next 2 minutes. We'll start with a session. So today our focus is on cost accounting systems and reconciliation. The complete chapter we'll cover today. Right, first we'll discuss the concepts of the cost accounting systems and reconciliation. Then we will do some module questions. I'll tell you the important questions and those questions we'll take up. Right. I'm just waiting for 1 more minute so that more students can join in. Good evening. All those who are joining in, please like the video. Okay, so first let me know all those who have joined in, how's your practice going? I mean, are you practicing and revising side by side whatever we are doing? All the chapters that we have covered so far, you feel confident about those chapters? Are you practicing some questions on that? I just want to have an idea. And all those who will be watching this video afterwards, you can drop the things in the comment section that how's your feeling about the chapters that we have already done in the revision. What you feel, are you practicing? What are you doing with that? Yes. Please let me know all those who are live. Is the audio clear? Once confirm again. Just confirm once if the audio is clear. All clear. Okay. So let's start with this chapter, cost accounting systems. Now, what this chapter actually deals with? This chapter is about recording the transactions in the costing books, right? Very simple terms if I say, this chapter is all about recording transactions in costing books. Recording transactions in costing books. Right, now the books are maintained in two ways. One, we call it as non-integrated bookkeeping. Non-integrated bookkeeping says that the separate set of books are prepared for costing and financial records. That means if we talk about the big concerns there, the costing department is separate, the financial department is separate. Both the departments prepare their own books, right? Very good, Shruti. Very good. If you are feeling confident, that's the only thing that you need for the exam. Very good. Well done. So separate books are prepared for costing and financial records. It is normally in the big concerns. Then another set is integrated bookkeeping. Integrated is where a single set of books are prepared for costing and financial records, right? That is in the small concerns where you cannot have the separate departments for costing and financials. So a single set of books is prepared. Now, first we'll be talking about the non-integrated bookkeeping. That is a separate set of books is prepared. In this chapter, what we normally do is there are three things that they will ask. One, the journal entries. Second, the ledger accounts. Third, the trial balance, right? They can ask you in the exam, they can ask you only about journal entries, or they will give you the data. You will have to prepare the ledger accounts directly and prepare the trial balance. So that's what they are going to ask. So what we will be discussing? We will be discussing all the journal entries related to all the transactions which are there, right? So first we'll talk about the non-integrated books. Now this is a very important part. What we say is in non-integrated cost bookkeeping, that means in the costing books, forget about the financial books. I'm talking only about the costing books. In the non-integrated cost bookkeeping, only nominal accounts are opened, right? And for real and personal accounts, that is cash, bank, Ram, Sham, for all these accounts, we are not going to actually open those accounts. A single account is used known as cost ledger control account or journal ledger adjustment account. So for real and personal accounts, we are not going to actually open the Ram Sham account, cash bank account. No. What we will use is we will use the CLC or the GLA account, right? Cost ledger control account, we call it as CLC account, right? And journal ledger adjustment, we normally call it as GLA account. So this is what we are going to open, right? We will not open the actual account, nominal accounts we will open. Now, all these transactions are broadly divided into four categories, right? What are the four categories that we divide all the entries? The first category is related to your material, raw material, like the purchase of raw material, purchase return, then issue of raw material. Issue can be to production, to office and administration and all those things, right? Second set of entries will be related to your labor cost. Third set of entries is related to your overheads. And the fourth set of entries is related to your finished goods. So broadly it is divided into these four categories. So first we will discuss all the entries which are related to our raw material. Material here means the raw material, RM. Let's talk about all the entries related to raw material. The first entry will be purchase of raw material. Now under the normal circumstances means under financial books. How will you enter this in the financial books? If you have to enter this entry in the financial books, what will be your entry? Your entry will be, sir, purchases account debit to cash bank or the creditor's account? Isn't it? Will this be the entry or anything else will be the entry? Yes, if you are purchases to cash account or the creditor's account, this will be the entry in case of financial books. Now in case of costing books, what will happen? The costing person says, sir, one thing is clear, for cash or creditors. Creditors means that is a personal account. The creditors means that is a personal account. They say is that, sir, for this I will use CLC or GLA account. Okay. What about for the purchases? Purchases is a financial term. The costing department says, sir, I don't know purchases. I only know what? I only know that the material is coming into the store. I know the word store. So he says, I'll take what? I'll take store's ledger control account, debit. This is nothing but your purchase account, to cost ledger control account, CLC account. This is about the purchase of raw material in the costing book. So SLC to CLC, simple rule. Stores will increase. So debit what comes in, credit what goes out. So the store is increasing. So I will debit the store and I will credit my CLC account, that is representative of cash or bank. Now, if there is a return of raw material, then what will happen? Credit what goes out. Now the raw material is going out of the store. So my store will reduce, store will be credited. So CLC, cost ledger control account, debit to SLC account. That means the entry will be reversed. Clear? So one is related to purchase of raw material. Another one is return of raw material. Okay. Then we will issue the raw material. Right? Issue of raw material to production. Production here represents what? The production here represents WIP. So your production will increase, your store will come down. Right? Production will increase and your store will come down. So debit the receiver, credit the giver. Production area is receiving, so I will debit the WIP account debit, or your production will increase. Right? Stores will decrease, that is stores ledger control account will be credited. And reverse entry for the return of raw material from production. If the production department says, sir, I am having excess raw material, I want to return it. Okay. Then WIP will reduce and the store will increase. Again, the raw material is back into the store. Right? Next, issue of raw material for repairs. Repairs and maintenance for any other thing. Then it is your factory overhead cost. It is not directly for the production. If it is directly for the production, we'll take it WIP. If it is for the repairs and maintenance or for any other thing, it will be factory overheads control account to SLC. Right? Simple rule. Store increasing. If the raw material is coming into the store, it will be debited. The SLC will be debited. If the raw material is going out of the store will be credited. Simple rule you have to remember. Right? Raw material coming into the store will be debited. Raw material going out of the store will be credited. So here the issue of raw material for repairs. Then we have issue of material to office, like the stationery, printing and stationery is there. So office and administration overheads control account debit to SLC account. Right? Office and admin overheads control account debit to SLC account. Then issue of material to sales department. For example, the advertisement material is lying there for the sales department, or the bill book is lying there, sales department. So selling overheads control account debit to stores ledger control account. Next, okay, normal loss of material. Now, in case of normal loss of material, what we say, anywhere, if there is a normal loss, what is the treatment? The treatment for normal loss is, it is absorbed by good units. It is absorbed by good units. Isn't it? This is what we say, that whenever there is a normal loss, the normal loss is to be absorbed by good units. Remember that example, that where 4 friends are going for party, one friend will never bring the money, right? The other 3 will absorb the cost of the party. So here it will be absorbed by good units. So normal loss, good unit means the WIP which are in the production. So WIP control account debit S2 stores ledger control account, because obviously if there is a loss of material, then that means that material is not going to be in the store anyways. Right? So WIP control account debit to stores ledger control account. Now, if there is abnormal loss of material, then if loss means the material is gone. it is no longer there in the store, right? So SLC will be credited for sure, store will reduce, but the abnormal loss, where we take the abnormal loss, as I told you that abnormal loss will always and always be taken to costing profit and loss account, right? So if there is any abnormal loss of material, then it will be costing profit and loss account debit to stores ledger control account. Costing profit and loss account debit to stores ledger control account, right? Then if there is a sale of raw material, as such you are selling the raw material, sir, sale and the profit or loss on the sale. So cost ledger control account, it will be your sale proceeds. Stores will reduce the stores ledger control account cost of material. Now let's say the cost of that material is 100 rupees. You are selling it for 120 rupees. That means 20 rupees of profit. So this profit you will take it to costing P&L account. Clear? Otherwise, if we say the cost is 100 rupees, right? You sold it for 90 rupees. Then what it is? It's a loss. Debit all losses. So the loss will be debited in the costing P&L account. Clear? So either there will be a profit or there will be a loss if you are selling the material as such. If you are selling the raw material as such. So these are all the entries, the journal entries which are related to raw material. And sometimes I tell you one more thing regarding the normal loss of material. Sometimes this entry is also posted as factory overheads, because sometimes the question itself specifies that any loss of material is to be treated as factory overheads. So this entry can also be treated as factory overheads to SLC account. Right? So I'm telling you an alternative, or sometimes the question might specifically tell you that if there is any loss of material, that is to be considered as a overhead. Right? I think there is a question where it is clearly mentioned that it is to be treated as a overhead. That's why I'm telling you. This normal loss of material can also be treated as factory overheads. Okay, please go through this all the transactions and let me know if you have any doubts in the raw material part. Any doubts in the raw material part? Yes, everyone. So first set of entries is done, that is related to raw material. No doubts? Okay, so let's move to the second set of entries that is related to your wages. That is very, very simple. When we talk about wages, there are three entries only. There are only and only three entries. One entry is related to your wages paid, right? For wages, there are always going to be three entries. First entry is related to your wages paid. So wages paid means the wages is your expense. So wages control account debit. Two, we cannot take cash or bank here. So we take cost ledger control account. So it will be wages control account debit to cost ledger control account, because we cannot take cash or bank here. So we'll take CLC or GLA account. After that, the wages can be of two types. Wages can be of two types. One is related to your direct labor that is involved in directly the production. Another set of wages is being paid to the indirect labor, which is not directly related to your production, right? Like sweepers and all. So this direct labor cost of the wages, let's say total wages you are paying is 1000 rupees. Out of this, the direct labor is 800 rupees. So this 800 rupees will go to production, and production here means WIP, right? So the entry will be WIP to wages. and the remaining 200, that is your indirect labor, so it will go to your factory overheads. So the entry will be factory overheads to wages. This is called as allocation of wages. See here, allocation of direct and indirect wages, right? So allocation means direct wages will go to WIP control account debit, that is your direct wages. Then factory overheads control account debit, that is your indirect wages to wages control account, right? This is your allocation of direct and indirect wages. So the wages account, if we talk about the wages account, these are the only entries which will be there. One is related to wages paid. Second, if you have paid the total wages, how much is related to your production, that is WIP, and how much is related to your factory overheads, that is your indirect labor. That's it. Clear everyone with this? Wages part is clear. Then we will move to overheads part. After this, we will move to overheads part. Yes, wages part is clear everyone. Okay, now when we talk about overheads, the overheads we divide into three categories, right? Overheads we divide into three categories. What are those three categories that we divide the overheads into? One is your factory overheads, that is the overheads related to your production. Another one is your office and admin overheads, and another one is related to your sales. So we call it as selling and distribution overheads, right? So we have to take the entries for this. For every overhead, there will be two entries. One, the overhead paid. Second, the overhead absorbed, right? So there will be two entries. One is related to the overheads paid. Another one is related to the overheads absorbed. The third entry will be what? The third entry will be under or over absorption. Under or over absorption. Right? So this is all related to your overheads. Let's talk about the factory overhead first. So factory overheads paid or incurred. So simple, factory overheads control account debit to cost ledger control account. Then factory overheads absorbed. Now factory overheads are related to what? They are related to production. So they will be absorbed in WIP. So WIP ledger control account debit to factory overheads control account. Right? So WIP ledger, because the factory overheads are what? These are the overheads which are related to production, which are incurred in the production. So we'll take WIP ledger control account debit to factory overheads control account. Clear? From here, you can have the under or over absorption. So I'll talk about what to do with the over and under absorption. First, we'll do this entry. Office and administration overheads incurred or paid. That is office and admin overheads control account debit to cost ledger control account paid, absorbed. Now listen to it very carefully. If your admin overheads are related to production, then you will take it to WIP. Right? Then you will take it to WIP. So that will be your WIP ledger control account debit. That is if admin expenses related to production. Otherwise, if it is the journal admin overheads, you will take it to finished goods control account. Finished goods control account to office and administration overheads control. Right? So it will depend upon the nature of admin overheads. If whether it is related to production, we'll take it to WIP. If it is the journal, take it to finished goods control account. Right? Then selling overheads. Selling overheads control account debit to cost ledger control account and absorbed. Selling overheads will always be absorbed in the cost of sales. So cost of sales account debit to selling and overheads control account. right? To selling overheads, selling and distribution overheads you can also write down. Clear? So this is all related to overheads. Now, what to do with the under and over absorption? What to do with under and over absorption of overheads? In this case, normally what we do is, if there is under or over absorption, if there is under or over absorption, remember in the chapter of overheads what we have done? In the chapter of overheads, we have done this under and over absorption, that we have to find out what is the reason for this under and over absorption. So there were three reasons that we discussed. First of the reason was, if it is due to abnormal reason, if it is due to abnormal reason, then what to do? Then this under or over absorption will be taken to costing, profit and loss account. It will be taken to costing, profit and loss account, right? Second, if it is to be set off in next period, if we expect that the under or over absorption of this period will be set off against the over or under absorption in the next period, then what we do is we carry forward it. We carry forward it to the next period. Then the third was, if it is due to genuine price rise or increase, if it is due to genuine reasons, then we calculate supplementary rate, and based on that supplementary rate, we divide this under or over absorption on the WIP stock, FG stock and cost of sales. This is what we have done. Now in case of cost accounting systems, in this particular chapter, normally what we do is, whatever is the under or over absorption, either we consider it as abnormal and take it to costing P&L, or we carry forward it to the next year. We write by balance carry down or to balance carry down. Done. Forward, carry forward to the next period. These are the two treatments that we normally do in the cost accounting systems. The supplementary rate treatment, we do not do it in the cost accounting systems normally. Sir, can we do it? Yes, you can do it. The journal entry, we have done it there. The cost of sales account debit, if it is under absorption, cost of sale account debit, WIP control account debit, factory overheads, FG control account debit to factory overheads. You can do that also. No issues, but normally we do not do that. Is that clear? So this is how the treatment of under and over absorption will be. If nothing is mentioned, you can assume it to be abnormal, transfer it to costing P&L or carry forward. Simple. Right? In this also, sir, how to decide whether to take it to costing P&L or whether to carry forward? If they are asking for costing P&L account, then you can transfer it to costing P&L. If they are not asking you to prepare costing P&L account, then just carry forward to the next period. And if there is a brought forward balance, then you can carry forward to the next period. Okay, is it clear? Everything related to the overheads. So factory overheads, always two entries will be there: paid, absorbed, and then under or over absorption. Yes, any doubts in this part? In the overheads part, just go through it, just revise it once and let me know if you have any doubts in this overheads part. What about rest of the people? Now let's talk about finished goods and sales. That's the last segment, last set of journal entries. So this is going to be the last set of journal entries with us. Let's start with finished goods and sales. Finished goods. The first thing is the finished goods you will prepare. That means the WIP will be converted to the finished goods. So you'll take the value, finished goods will increase and your WIP will reduce. Right? So it will be finished goods control account debit to WIP ledger control account. Finished goods control account debit to WIP ledger control account. After that, you will start selling the finished goods. So cost of goods sold. So here we'll take cost of sales account debit to finished goods control account. When you are selling the goods and you are recording the sale of goods at cost. This is the sale of goods recorded at cost. The profit element is not added here. Right, what I'm saying is the profit element is not added here, so it is cost of sale to finished goods. Now very simple, finished goods will reduce, so finished goods will be credited, cost of sales to be recovered, so it will be debited. Reverse entry for the cost of goods returned by the customer. So if they are saying cost of the goods returned by the customer, now if the customer is returning the goods, that means your finished goods stock will increase. Isn't it? So your finished goods stock will increase. That means FG control account will be debited to cost of sales. Right. So cost of goods sold. Then sale of goods. Then we have the entry for the sale of goods. So it will be CLC to costing P&L account. Now what is there, sir? If you remember, if you know, when we prepare our trading P&L account, when we prepare trading P&L account, in that case, how do we prepare it? Here we write sales. Wait. Here we write what? Here we write our sales. Right? So entry will be what? Sales to P&L. So instead of sales, we have directly taken it to costing P&L to, CLC to costing P&L. This is what? This is the substitute for sales we are taking. This is the substitute for sales we are taking. Right? If there is a return of goods sold at sale price now, not at cost, so the entry will be reversed, costing P&L to CLC. Profit, if there is a profit, now how do we record profit in this particular part? So here we write profit, right? So P&L to profit. So that is what is there, P&L to CLC, the profit will be taken to CLC. So I'm writing P&L to CLC. Recognition of loss, the entry will be reversed, that is CLC to costing P&L. So for this, what you have to remember is, just remember this trading P&L, how you are recording it here, how you are recording the entry in this particular trading P&L part. If it is the sales part that you are taking, then the sales to that sales is what? Sales we are taking it as CLC. If it is profit, then P&L to profit. Profit is what? CLC. Right? So with this, we are done with all the 4 segments. We discussed about material, we discussed about labor, we discussed about overheads, and we discussed about finished goods. Just go through with all the entries, then we will discuss further few points. Okay, after that, what is there? Prepare the ledger accounts from the above entries. For over and under absorption of overheads, either carry forward to next period or transfer it to costing P&L, assuming it to be abnormal. That's what I told you. That is what we normally do. Right, so this is all about non-integrated books. Now, sir, what is the difference with the integrated books? If we talk about integrated books, The only difference is in the integrated books, we will not prepare CLC or GLA account. What I'm saying is, in the integrated books, we will not prepare CLC or GLA account. What we will prepare is, we will prepare the actual account, right? We will prepare the actual account, cash, bank, RAM, Sham, personal accounts, real accounts, all the accounts we will open. Rest will remain same. Like purchase of raw material. So we'll record it as SLC, that is stores ledger control account, debit to cash or bank or creditors. So we'll open the actual account. So for integrated books, the cost ledger control account will not be required. Actual accounts will be opened. Rest entries will remain same. Is that clear, everyone? Okay. Any doubt in the entries? Just go through with all the entries. Just revise it once and then let me know if you have any doubts in any of the entries. Yes, please let me know if you have any doubts in any of the entries. What about rest of the people, guys? At least you can respond when I am asking. Or the other thing is, I do not ask at all. I'll just keep on teaching and just finish. Okay, just go through with all the entries. After that, I will discuss one more thing related to overheads. I'll discuss one more thing related to overheads. Now, in the question, if you are given, in the question you are given the debit balances and credit balances, right? Like for SLC, for the stores, it will be a debit balance, right? And for WIP also, it will be a debit balance. For finished goods also, it will be a debit balance. CLC, the CLC will always have a credit balance normally, right? CLC will have a credit balance. Then when we talk about manufacturing or production overheads, now this can have a debit balance also and this can have a credit balance also. If it is a debit balance, what does it represent? And if it is a credit balance, then what does it represent? Debit balance means what? When you are preparing a production overhead control account, right? So how do we prepare this? If we talk about the production overhead control account, sir, how do we prepare this production overhead control account? Always on the debit side, this is your debit side, right? And this is your credit side. On the debit side, what we take? On the debit side, we will always take the actual overheads incurred. We'll take actual overheads incurred, right? And on the credit side, what we take on the credit side, because what is the entry for actual overheads paid? That is production overheads to CLC, right? So this debit side will always represent what is the actual overheads which are paid, and the credit side will always represent the absorbed overheads. It will always represent the absorbed overheads. Now, if there is a difference, if your actual overheads are more than your absorbed overheads, then what is there? Actual overheads is 1 lakh, but you have absorbed as 80,000. So this 20,000 will be what? This 20,000 will be your under absorption of overheads. So what we will do with the under absorption, that is what I told you, that we can write it as by balance carried down. By balance carried down 20,000. Right? Now in the next period, when you are going to prepare your production overheads control account, in the next period when you will prepare your production overheads control account, in that case what will be there now? Now this 20,000 you will take it here, you will write it as what? You will write it as to balance brought down. To balance brought down 20,000. Right? So this is what? This is, we call it as a debit balance. This is called as a debit balance. So if you find in the question, in the manufacturing overheads, there is a debit balance which is given. So this represents what? This represents under absorption of previous period. This represents under absorption of previous period. Right? So if it is a credit balance, then it will be reverse. So if it is a credit balance, it will be what? It represents your over absorption. It represents over absorption of previous period carried forward. So please very careful with this thing. Is this point clear? Now this is an important point, that what the debit and credit balances reveal. SLC will always have a debit balance. Why it will have a debit balance, sir? Because there will always be some stock in the store. So it will have a debit balance. WIP, something will be in the manufacturing, it will have a debit balance. Finished goods, some stock of finished goods you will always have, so it will have a debit balance. Right? CLC normally has a credit balance only. Is this point clear, guys? Now this is a very, very important point. Please let me know if this point is clear to you. This manufacturing part is clear. Yes. Okay. So with this, we are done with the cost accounting systems part, right? So let's do the question on this. Yes. Thank you for your response. Now let's come to this question number 5 on the cost accounting systems. Then we will go to the reconciliation part. Now this cost account, in the cost accounting systems and reconciliation, 90% of the times the question is coming either from the reconciliation part, or they are asking only and only the journal entries. Ledger accounts, they are asking comparatively less. But it is not like they cannot ask, they are asking comparatively less. And if they are going to ask, then this is an important one. The missing figures value. The missing values, this part is important. Right? So let's do this particular question. A fire destroyed some accounting records of a company. You have been able to collect the following from the spoiled papers or the records, and as a result of consultation with the accounting staff for the month of January. So some incomplete ledger entries are there for material to balance brought down. That is, the opening balance of material is given. For WIP to balance brought down, that is, the opening balance is given, and the finished goods control account. That means finished goods to WIP. How much of the finished goods are prepared. Then the payables or the creditors account is there. Then manufacturing overheads control account is there. That is the amount spent. Bank account means the amount spent, what is actually incurred. Finished goods control account to balance brought down and by balance carried down. Right? Okay. Further, additional information says the bank book showed that rupees 89,200 have been paid to the creditors for raw material. Ending inventory. So I'll read the question once and then we will start with it. Ending inventory of WIP included the material of 5,000 on which 300 direct labor hours have been booked against wages and overheads. The job card showed that the workers have worked for 7,000 hours. The wage rate is rupees 10 per labor hour. Overhead recovery rate was rupees 4 per direct labor hour. You are required to complete the accounts. So let's take the entries one by one now. If you look at this accounts, anything you can complete. See here, for the WIP, the finished goods are given as 1,51,000. So in the finished goods account, can I write here to WIP 1,51,000? Yes, sir. 1,51,000. Right? 1,51,000. We can write it down. No issues with that. Right? Next, after that, what we can do? After that, let's see the entries one by one now. So we'll see the entries one by one. What is given? The bank book showed that 89,200 have been paid to creditors for raw material. So what will be the entry? The entry will be creditors to bank. Creditors to bank. Do you have the creditors account here? Yes, sir. We have the creditors account here. So here I can write to bank 89,200. So can you tell me what will be the balance here? You have a balance brought down. 16,400 is payable to the creditors, right? And you have paid 89,200, but still there is a balance of 19,200. So what that represents? The balance represents the purchase from the creditors. So here can we write purchases by purchases. Purchases of what? Or material account we can write down, right? So what it will be? So this will be 92,000. So your material or purchases will be 92,000. So in the material account, I can write here to creditors. To creditors 92,000. Right? To creditors 92,000 I can write down. Next point. Next point says the ending inventory of WIP included the material of 5,000 on which 300 direct labor hours have been booked against wages and overheads. That means he's talking about closing WIP. He says in the closing WIP, there are three costs which are involved, right? The first cost is your material cost. The first is your material cost. Second one is your labor cost. And third one is your overheads cost, right? Material cost is what? Material cost is given as 5,000. That is what is given, material of 5,000. Now for wages and for overheads, what he says? Sir, for labor and overheads, he says 300 labor hours they have taken, 300 labor hours. So how will you calculate the labor cost here? Labor cost will be 300 hours into labor rate. What is the labor rate? Rupees 10 per labor hour. So I'll multiply it with rupees 10. So that comes to 3,000. So this is rupees 5,000. What about the overheads? Now for overheads, if we are taking 300 labor hours, we are absorbing the overhead on the basis of labor hours. What is the absorption rate? The absorption rate is given as rupees 4 per direct labor hour. So I'll multiply it with 4, 1,200. So what is this cost? Rupees 9,200. This is the closing balance of WIP. So in the WIP account here, we can take it by balance carried down 9,200. Is that clear? To balance carried down, this creditors account is already complete, right? This creditors account is already complete. right? Now next, we have is the wages paid. For 7,000 hours you are paying at 10 rupees. That means 70,000 of the wages that you are paying, and it is from a particular job, so it is your direct wages that you are paying. What is the entry for wages? What is the entry I told you for wages? For wages it is wages to cash or bank, that is wages paid. Then if it is direct wages, you will take it to WIP. Now wages account is not required, but WIP account is here. So in the WIP account you will take here what? To wages. To wages 70,000. Next we have is overheads. Next what we have is the overhead recovery rate is ₹4 per direct labor hour. That means how much of the overheads you are absorbed. If you look at the overheads, actual amount spent is given. So here if you have to, you will absorb it in the WIP. What is the amount that you will take? They say ₹4 per direct labor hour. So how many labor hours have worked? 7,000. Right? So the entry absorption will be 7,000 hours of labor into 4 rupees. That is 28,000. So in the WIP, here you will write to factory overheads 28,000. Clear with this? You will write here 28,000. Now we are going to just close it. Manufacturing overheads, actual amount spent is 29,600. WIP that is absorbed is 28,000. So rest will be by balance carried down. By balance carried down or costing P&L. Or costing P&L account, that is 1,600. So this is done. Manufacturing overheads control account is done. Then finished goods. To balance brought down, opening balance of finished goods plus what you received from the WIP you have taken minus the closing balance. That will tell you what? How many of the finished goods you have sold, and that is at cost. So here you will take by cost of sales. By cost of sales. So what will be the balance? 1,45,000 will be your cost of sale account closed. So these three accounts are closed. Now only left is material and WIP. Now if you look at WIP account, brought down is 9,200, carried down is 9,200, finished goods control, whatever you transfer to finished goods given, wages given, factory overheads given. The only thing which is missing is now that whatever is some raw material would have been issued to WIP now. Some raw material you would have issued to WIP, isn't it? So that is the only thing. So here the balancing figure will be to SLC or material. This will be your balancing figure. This will represent what? This will represent the material issued to WIP, that comes to 53,000. So in the material you will write here by WIP 53,000, and here you will take by balance carried down 71,000. Right, so you have to close the accounts very carefully. That is going to be one very important part. Right, that is going to be one very important part. Yes, any doubts in this question? Is this question clear, everyone? Done, no doubts? Okay. So let's come to this practical problem 1. Again a similar question where we have to find out the missing figures. All entries in ledger are done. That you want to do. Okay, let's do one practical problem first, then we'll see to that. Right? Then we'll see to that question also. First, let's do this practical problem 1. The following incomplete accounts are furnished to you for the month ended 31st of October 2022. Stores ledger control account, what is given to you? You are given the opening balance to balance 54,000. So this is the opening balance which is given to you. Then after that, you have WIP control account to balance. Again, the opening balance of WIP is given to you. Finished goods control account to balance. Opening balance is given to you. Then factory overheads control account. Then we have factory overheads control account. That is the total debits for October. So this is what? This is the actual overheads incurred which are given. Actual overheads incurred which are given to you. Then factory overheads applied separate, cost of goods sold creditors by balance. So it is again the opening balance of creditors which is given to you. Right? It is again the opening balance of creditors which is given to you. Okay, next. Additional information. So that means these all accounts will be required: SLC, WIP, FG, factory overheads, then creditors account. So all these accounts will be required. What they are saying is the factory overheads. So the best thing is first prepare the blank accounts. All these accounts, just fill up the opening balances, whatever is given, just write down the opening balances. That's it. Right, opening balances, and for factory overheads, the actual overheads incurred. Just write down that much part. After that, additional information. Guys, is there any problem? Wait. Okay, we are back. So I think there was a drop for a moment. Okay, everything is fine. You people are able to see, everything is visible. Please confirm once. Okay. Yes, now there was a temporary drop for 2 minutes. Okay, so the budgeted overheads for the year 22 is 6,75,000 and the budgeted labor hours is 4,50,000. That means we can calculate from here the overhead absorption rate we can calculate, right? That will be 6,75,000 divided by 4,50,000. 6,75,000 divided by 4,50,000, that comes to 1.5 per labor hour. This is how you are going to absorb your factory overheads. 1.5 per labor hour. So after that, it is given the balance in the account of creditors for the purchases on 31st of October is 15,000. This is the closing balance of creditors. This is the closing balance of creditors. And the payments made to creditors amounted to 1,05,000. Again, to bank 1,05,000. So from this information, what you will get? You will get your purchases. You will get your purchases. Right? So I have prepared the accounts here. If you look at the creditors account, this brought down balance, this is given to you. Right? Carried on balance, this is given to you. This bank, that is the payment, this is also given to you. So what is left is 90,000. Stores will take it to stores ledger. It represents what? It represents your purchases. So in the stores ledger, we have taken here to creditors 90,000. This balance brought down is given. WIP balance brought down is given. Finished goods brought down is given. And for factory overheads to bank, which is the actual overheads incurred. This is the information which is given to you. Right? So creditors account is complete. With just one entry, the creditors account is complete. Now, next, the finished goods inventory as on 31st of October is 66,000. Okay, sir, we will record in the finished goods 66,000 entry. So, by balance, carried down 66,000. Done. Next entry is the cost of goods sold during the month was 1,95,000. So, what will be the entry? The cost of goods sold or cost of sale to finished goods? 1,95,000. So in the finished goods, we'll take cost of goods sold 1,95,000. Entry done. Right? This entry also completed. Then on 31st of October 2022, there was only one unfinished job in the factory. That is, they are talking about WIP again. The cost records show that rupees 3,000, 1,200 direct labor hours of the direct labor cost and rupees 6,000 of the direct material cost has been charged. So if you talk about the closing WIP, what is the value of closing WIP? Now WIP will have three costs. Material cost, which is given as 6,000, labor cost, which is given as 3,000, overhead cost. Now how will you take overhead cost? For the closing WIP, how will you take the overhead cost? We have calculated the absorption rate, that is 1.5 per labor hour. So in this closing WIP, how many labor hours are there? 1,200. So 1,200 into 1.5. 1,200 into 1.5. Correct. Right? So 1.5 into 1,200, this will give you 1,800. So this will be your total closing WIP. So closing WIP balance carried down 10,800. Clear? Closing WIP balance carried down 10,800. Next, a total of 28,200 direct labor hours were worked in October. All the factory workers earn the same rate of pay. So labor cost, how will you take labor cost here? 28,200 multiplied by what is the labor rate? How will you calculate the labor rate here? The labor rate will be calculated from this. For 1,200 labor hours, what is the labor cost? 3,000. So 3,000 divided by 1,200, the rate is 2.5. So 2.5 into 28,200, 70,500. You will take it to what? You will take it to your WIP account, that is the wages paid of 70,500. This will represent your wages cost. Next is the actual factory overheads incurred in been posted. Okay, actual factory overheads we know, but can you tell me what will be your absorbed overheads? What will be your absorbed overheads? Your absorbed overheads will be based on hours. So how many hours you are working? 28,200. What is the absorption rate? That is 1.5. So 28,200 into 1.5, 42,300. This is your absorbed overheads into WIP. So WIP 42,300 and here factory overheads by WIP 42,300. Clear? So according to the information that is given, we have posted everything. Now we have to close the account. See the tick marks. I have done the tick marks here, right? Creditors account already closed, sir. Creditors account I have already closed. Nothing left in the creditors account. If you look at the factory overheads, you have the actual factory overheads incurred. You have the absorbed factory overheads. So rest is what? You are under absorption. Your actual is 45,000. Your absorbed is 42,300. So rest is what? The under absorption of 2,700. Closed, account done. Then out of this finished goods, see, for finished goods, balance carried down is done. Cost of goods sold is done. Balance brought down is done. Now, what is that one entry which is left? there will be, if you are selling the finished goods, opening balance is only 75,000. You are selling the goods worth 1,95,000. That means you must have received some finished goods from WIP. Right? So that entry is there. WIP 1,86,000. In WIP you will post by finished goods 1,86,000. Finished goods account closed, sir. Right? So you have to logically think that, okay, what can be the balancing figure? In the finished goods account, the three things are given: opening, closing balances and goods sold. So what is the only thing not given? That how much of the goods received from production, that we have to take from WIP. Now WIP account, opening, closing balances are there, transfer to finished goods is there, wages cost is there, factory overhead cost is there. So what is left? What is left? The cost of material transfer to WIP. That becomes your balancing figure, 78,000. Similar to what we did in the previous problem. So here do we write WIP 78,000, rest will be your balance carried down, that is 66,000. So we have closed all the accounts. Basically what they are asking for, see the requirement here: material purchased during October 2022. Material purchased means this creditors part 90,000. So material purchased is 90,000. What is the cost of goods completed? Cost of goods completed means from WIP transfer to finished goods, that is 1,86,000. Overheads applied to production. Overheads applied to production, that is your absorbed overheads. Your absorbed overheads is 42,300. So we'll write here 42,300. Then balance of work in progress control account on 31st of October, WIP control account. Closing balance 10,800. So here we'll write 10,800. Direct material consumed during, consumed means issued to WIP 78,000. Balance of SLC account on 31st, that is the closing balance of SLC, 66,000. Then over or under absorbed overheads for the October, over or under absorbed overhead is 2,700. Now this question is very, very, very important. Even if they are not going to ask all the parts, they can ask you 4 or 5 parts out of it and frame a question. So it is a very, very, very important question. The missing figures question is always important. Okay, Vedant, any specific question you want me to take where you are asking for all the accounts? Because why I am not taking those questions is because that is comparatively simpler, where you just have to do the journal entries, and from there do the postings. I took up, if there is any specific point, any specific question I can take up. Or we can take up this illustration 4. It's more or less good. I'll first discuss what the journal entries for this. We can take up illustration 4 if you want. First, let me know if practical problem 1 is clear to you. Yes, practical problem 1 is clear, guys. Okay. Let's take up illustration number 4. Fine. Okay, I'll take illustration number 4. With that, cost accounting systems will be done. Right? Then we'll take a break and then we'll do reconciliation. Reconciliation is easy, small topic. We'll do the reconciliation part. Let's come to illustration 4. In the absence of the chief accountant, you have been asked to prepare a month's cost accounts for a company which operates a batch costing system fully integrated with the financial books. Right? So it is an integrated books. No need to open the CLC account. Then you can open the normal accounts. The following relevant information is provided to you. Balances in the beginning of the month is given. Stores ledger control account, it will be a debit balance. Work in progress control account, debit balance. Finished goods control account, debit balance. Now, the next one, prepaid production overheads brought forward from the previous month. Okay, tell me whether this will be a debit balance or a credit balance. Whether it's an under absorption of the previous period or an over absorption. Read the line carefully and tell me. What do you think it is? Whether it's an under absorption or whether it's an over absorption of overheads of the previous period. What it is? Yes. Under absorption. Correct. It's an under absorption. Why? Because see the wording here. Under absorption of the previous period. Why? Because, correct, it is under absorption because if you see the wording here, they say prepaid overheads. Prepaid means in the previous period you have already paid, right? So paid is more than absorbed. So it is the under absorption of the previous period, and under absorption means it's a debit balance which is given to you, right? So this 3000 represents what? It represents under absorption of previous period, right? It represents under absorption of previous period. Now, transactions during the month. Let's talk about transactions during the month. Material purchased, the journal entry will be SLC account debit. If it is material purchased, then the entry will be what? The entry will be SLC account debit to cash or bank account. So we can take bank account here. SLC account debit to bank account. Then if it is material issued to production, that is WIP to SLC, right? So what is the rules for accounts here? In case of cost accounting systems, when they are asking you to prepare the ledger accounts, what you should do is you should prepare the main accounts. You will get to know which all accounts is required to be prepared, like CLC account, SLC, WIP, wages, factory overhead, finished goods, costing, P&L. All these accounts will be required to be prepared. Factory overheads account. So prepare the blank accounts. And after that start posting the entries one by one. First record all the opening balances recorded, right? After that this entry SLC to bank. Now if you see here, SLC account, they have written here the creditors or bank 75,000 after opening balance. In the second entry, right? So they are asking specific accounts: SLC, WIP, finished goods, production overheads, and costing, P&L. These are the 5 accounts that they are asking for. The second entry is WIP to SLC. So you will record in the SLC, you will record here as WIP 30,000, that is issued to production. Simultaneous entry you will post it in the WIP account. Similarly, you will post it in the WIP account, that is the stores ledger control account 30,000. So what is the benefit of preparing the blank accounts is that you will be able to post the double entries simultaneously. If you are preparing one account at a time, then the chances are that you might miss out on some entry, right? So that's the benefit. Prepare the blank accounts, post both the sides. Next entry is material issued to factory maintenance. Factory maintenance means it will be production overheads to SLC. That will be the entry, as I have already told you, right? Material transferred between the batches. Will there be any entry for this material transferred between the batches? Will it impact your stores? No, sir. Will it impact your WIP? No, sir. WIP will remain that only, right? So for this, there will be no journal entry. Will it impact your finished goods? No, sir. It is not going to impact any of the accounts. Clear? So material transferred between the batches, no entry. Then total wages paid to direct workers and to indirect workers, that is 30,000. So first entry will be what? First entry will be wages account debit to bank account. Wages to bank 30,000 and 30,000. Total wages paid. Now out of this, how much is paid to the direct workers and how much is paid to the indirect workers? If we talk about indirect workers, it will directly go to factory overheads. So we'll write factory overheads to wages. This is what we are going to write. Factory overheads to wages. Now direct workers, please be very careful with the direct workers. What they are saying is, for the direct workers, total wages paid is 25,000. Read the next two lines. They say direct wages charged to batches is 20,000. Out of this 25,000, 20,000 is directly related to my batches, directly related to my production. That will go to WIP. So the entry for this will be WIP to wages. And recorded non-productive time of the direct workers, idle time. So is it related to your production directly? No, sir. During this period, we are not producing anything. So where will you take? This part will be your factory overheads to wages. So this is one important point here. Right? This is not directly related to your production. So it will become what? Your overheads. After that, selling and overheads incurred. Selling and overheads incurred. So it will be selling and distribution overheads to bank account. Right? After that, other production overheads incurred. Other production overheads incurred. So it will be production overheads to bank account again. Sales. What will be the entry for sales? That is bank or debtors to costing P&L, because they are asking for costing P&L here. Then cost of finished goods sold. So it will be cost of sales to finished goods. Cost of goods completed and transferred into finished goods during the month. So FG to WIP. Physical value of WIP at the end of the month. This is the closing balance of WIP which is given to you. So closing WIP is given to you. Is the entries clear? After that, all the entries have been posted. WIP, production overheads control account, that is issued for repairs, closing balance. Paid to direct workers, indirect workers. Then charge to batches, WIP, production overhead 5,000, production overhead 5,000. Wages account done. After that, production overheads account, that is the opening balance 3,000. Then 4,000 from SLC. Wages control 10,000. Bank, that is paid, is 12,000. This 12,000 of production overheads actually paid 12,000. Right? Absorbed. Okay. I think we are missing out on one line. This line here. The production overhead absorption rate is 150% of the direct wages charged to WIP. So what is your absorbed overheads? That is 150% of wages charged to WIP. So wages charged to WIP is not 25,000. It is 20,000. Right? So the absorbed overheads here will be 30,000. So that is what absorption they have taken. WIP 150%, 30,000. So remaining here you are getting the over absorption. They are transferred it to costing P&L. And as I told you that if the costing P&L account is required to be prepared, then it is better you transfer the over or under absorption to costing P&L account. Then you transfer it to costing P&L account. Clear with this? Then WIP. Now in the WIP account, see, the opening balance is given, right? The closing balance is given, finished goods is given, whatever the material is transferred from WIP given, wages account given, production overheads absorbed given. So what is left here? There is nothing else left. So what they have done is, the rest is, now this side is more. You did less of expenditure, you manufactured more. That is what? That is your abnormal gain. That is your abnormal gain from WIP. Stock gains taken to costing P&L. So it is just like your abnormal gain. Your result, right? Your finished goods or the output from the WIP is more than what the expenditure is done. So it is your abnormal gain. After that, finished goods control account, balance is given, WIP done, cost of goods sold and balance WIP. Or directly you can take it to costing P&L also. That's fine. 80,000 you can directly write here costing P&L. Better to write costing P&L, otherwise you will have to prepare cost of goods sold account. From cost of goods sold account you will transfer it to costing P&L. Clear? So then costing P&L, sales given to you. From the finished goods sold, cost of finished goods sold given to you, selling and distribution given, production overheads, stock gain taken and the balance carried down. Right? So most important thing is you are able to understand the journal entries. Just go through with all the accounts. If you have any doubts, please let me know. Please let me know if you have any other doubts. Yes, any doubts, guys? Clear? See, one thing that you have to practice when you are preparing these accounts is how to close the accounts. That is going to be the trick, right? That you will understand and that you will learn with the practice, that how you are going to close those accounts. That is the only trick that is required. No doubt. Okay. Fine. Just practice this more questions. If you have any doubts, then we can take up in the WhatsApp group also. Right? So with this, the cost accounting systems have tried covering the important questions. Next, let's take a break, 15-20 minutes break, dinner break. Then we will start with reconciliation part. Again, it's a very small part, very easy and a very small part, and one of the most scoring part, I would say. One of the most scoring parts it is. Right? So let's take a break now. So we'll resume in 15 to 20 minutes, we'll start. You can also take a break. Right? Okay. Okay, yes everyone, we are back. So please let me know if you guys are there. Okay, I'll update about FM when we are going to start with FM. Right? So you can stay tuned with the YouTube or you can join the Telegram channel. There I'll update whenever we are starting with FM. As of now it is costing, after costing will start. Okay, yes everyone, please let me know if you people are back so that we can start with the reconciliation part. Yes. What about others who were online? Vedant, Ranjana, are you guys back? Yes, Suhasini, fine. Okay. Okay, so let's start with this very small topic of reconciliation. Now, what is there in case of reconciliation? First and foremost thing is, reconciliation is required only when there are two separate set of books being prepared. Right? When you are preparing the costing book separately and you are preparing the financial books separately, at the end of the year, then you have to decide, then you have to merge these two books, because ultimately when you are filing your returns, you need to submit only one books, right? You cannot submit both the books. So you need to adjust the profit of one books according to the profit of another book. So reconciliation is required only in case of non-integrated books, right? Where there is a difference between costing profits and financial profit. So you need to reconcile them. For reconciliation, we prepare this reconciliation statement. Now, for this reconciliation statement, what we do is, we need to understand what are the reasons for difference. We need to adjust those reasons. We can start with the adjustment of any of the profits, either the costing profits or the financial profits. This is your starting point. This is your starting point, right? Whatever the profits, if nothing is mentioned in the question, you can start with, see here, I've specifically written, if nothing is mentioned, we can start with any of the profits and accordingly the adjustments will be done, right? We can start with any of the topics, profits, and accordingly. Now, if you are starting with cost profits, then you have to make sure that all the adjustments are being done according to the costing profits, so that we can reach the financial profits, right? What I'm saying is, all the adjustments to be done according to the costing profits if you are starting with the cost profit. If you are starting with financial profits, then all the adjustment will be according to the financial profit. For example, purely financial income credited to the financial accounts. Now, for any of the adjustments, if you have any doubts, what you can do is very simple thing, very simple technique. Just prepare like this, cost account, right? So there is a cost account which is there. Then prepare a financial account. Prepare a financial account. Okay. Now let's take the gross profit here 1 lakh. Gross profit here 1 lakh. Now what they are saying is, they are saying here the purely financial income credited to financial accounts. That means there is a certain income that you have recorded here. Let's say 10,000. But you are not recording it in the cost accounts. So here your net profit will be 1,10,000. And here your net profit will be how much? 1 lakh. Now in order to reconcile both these profits. Now, which profit will you adjust? Whichever profit you are starting the question with. Now here we are starting with the costing profits. So we will adjust this costing profit. What we'll do? We'll add this 10,000 to match it with the financial profits, right? So that is why it is written here, add purely financial. What we have written here is add purely financial income credited to financial accounts. Similarly, if there is a purely financial expense means what? That there is an expense which you have recorded only and only in the financial books, right? There is an expense which you have recorded only and only in the financial books. So what will happen? Your financial profits will be low, your costing profits will be high, because you have recorded an expense in the financial books. So financial profit will be low, your costing profit will be high. If you want to adjust this costing profit, what will you do? You will bring this down. So it is subtracted. Similarly, appropriation of profits, that is from the financial part. Purely cost expense, it is to be added. How, sir? You have taken an expense in the costing books. Now what will happen in this case? Your costing profit, okay, this is your costing profit, it will be low. Your financial profit, this is your financial profit. Your financial profit will be high, right? So this profit is to be adjusted. You will increase this profit. So add. Clear? So this is how you can find out that which item is to be adjusted. Now see, over absorbed overheads. Now see the absorption part here. Over absorbed overheads. What will you do in this case? Let's see. I'll write it in this only. I'll rub this and take it this part. Over absorbed overheads. Now what we do here, sir? In case of, always remember what we are doing is, in case of financial books, we take actual overheads, right? Actual overheads, let's say, is 10,000. So what will be your net profit here? That is 90,000. Over absorb means what? Over absorb means that in the costing books, you have taken more of overheads. That is your absorbed overheads. You have taken it as, let's say, 15,000. So your net profit here will be 85,000, right? This is what? This is now your absorbed overhead. So it will lead to over absorption. Your actual overhead is 10,000. Your absorbed is 15,000. So this over absorption, what will you do here now? If you are going to adjust the costing profit, you will add here 5,000. So this will be 90,000, matching it with 90,000. That is why we are doing it over absorbed overheads. Similarly, the reverse is if there is under absorbed overheads, then the difference in depreciation can be there. Opening stock valuation and closing stock valuation difference can be there. Ultimately, you will reach at financial accounts. Right? Is that clear? So this is how the statement. Now, if this statement is to be prepared in the form of a T account, in the form of account, we call it as memorandum reconciliation account. That's it. We call it as memorandum reconciliation account. If we prepare it like this, right, there we take profit as per cost accounts, profit cost accounts. Then all the items which are to be added, you will record here. All the items which are to be subtracted, you will record here. And ultimately, you will reach at profit as per financial books. Right? This is what will be done. So this is all about the reconciliation part. In case you feel any of the items you're not clear whether it should be added or whether it should be subtracted, just do this thing. Prepare any of the accounts. Just take any random figure of profit, prepare this account, cost account, financial account, prepare the accounts, take some random figures and find out whether which profits you are adjusting. Accordingly, addition and subtraction will be done. Any item that you feel is difficult in this part, just go through it. Just go through it. Any item you feel which might give you trouble, I'll take that. Tell me. Just go through it. Take a minute, go through it. Any item you want that I should explain, I'll take up that. Yes, please let me know if any of the items you feel might be difficult, might create some trouble. After that, I'll move to the questions part here. Yes guys, please let me know if there is any item or we can proceed to the question. No doubt. Okay, fine. Then let's proceed to the question on reconciliation. Now, what type of questions on the reconciliation can be there? One is they will ask you to prepare the reconciliation where the costing and financial profits are given and some adjustments are given. That is one type of question. Another type of question in this variation, they will give you only one profit, either the costing profit or the financial profits. They will give you the items to adjust and they will ask you to find out the other set of profit, right? In that case, you will not be able to verify the profit, whether it is right or wrong. So you have to do the adjustment very carefully. Third type of question is memorandum reconciliation account, they might ask you. Fourth type of question is where they give you the information. They ask you to prepare the financial books. They ask you to prepare the costing books and then reconcile the two, right? This is another type of thing that they can ask you, right? That is another type of thing that they can ask you. Okay. Let's come to a problem, illustration number 7. So we'll take up this illustration number 7. Following are the figures extracted from the cost ledger of a manufacturing unit. Stores are given something related to the store's opening balance, purchases, transfer from WIP is given to you, issue to WIP is given to you. That is, this is return from production. This is your return from production. Issue to WIP is issue to production. Issue to production, return from production and issue to production. Issue to repairs and maintenance, sold as a special case at cost. Okay, you have sold the raw material as such, right? This is what? This is your sale of raw material. Then shortage in the year, right? So this is another shortage which can be taken as overheads. If it is a normal shortage, considering it as a normal shortage, we'll take it to overheads. Then WIP, opening inventory, direct labor cost charged, that is direct labor cost which is taken to WIP, right? Overhead cost charged, that is your absorbed overheads. Then closing balance of 20,000, finished products, entire output is sold at 10% of the profit on the actual cost from the WIP, right? Then wages for the period and overhead expenses for the period are given. This is what? This is the actually incurred part. Actually incurred wages and actually incurred overhead expenses, right? Actually incurred wages and actually incurred overhead expenses. This is what is given to you. Ascertain the profit or loss as per financial books and the cost books and reconcile them, right? Okay, with regard to overheads, in the reconciliation also, with regard to overheads, one thing that you should keep in mind is what? That in the financial books, one thing that you should always keep in mind is, in the financial books, what we take is, in the financial books, we take actual overheads incurred. In the financial books, we always take actual overheads incurred. And in the costing books, what we take is, we take absorbed overheads. Right? So in the financial books, we always take actual overheads incurred, and in the costing books, we always take absorbed overheads. So in the overheads, there can always be a difference. Okay, let's see what is done. I have taken a solution from my batch. For cost sheet is what? I am preparing it for the costing books to find out my costing profit. Right? Costing books where I want to find out my costing profits. The first thing that we take in the cost sheet is what? The first thing that we take is the direct material consumption. Right? How much of the material is getting consumed? If you see here, you have issued a material of 80,000, out of which 40,000 of the material is being returned. So that means how much of the material is getting consumed? That is 40,000 of the material is being consumed. So that is what we have taken here, direct material consumption, that we have taken 40,000. Direct wages. So what will you take in the direct wages, sir? What are the direct wages here? See here, the direct labor cost charged is 30,000. So the direct labor cost is 30,000. See, what is the total wages you are paying? 35,000. Total wages that you are paying is 35,000. Out of this 35,000, how much is your direct? Direct is 30,000. Your direct is 30,000. Rest is your indirect. 5,000 is your indirect wages. That is, this is your overheads. So, direct wages taken 30,000. Done. You get the prime cost plus production overheads. Which production overheads you will take? Actually incurred or absorbed. That is what I told you. The production overheads that we will take is the absorbed one. Which one we will take? Absorbed. That is 1,20,000. You will get your gross factory cost. Opening closing WIP is there. You will get net factory cost or the total cost. Add profit, you will get your sales. Because what they are saying is, if you look at the finished goods, they say the finished goods, the entire output is sold at 10% profit on the actual cost from WIP. So in the WIP, the actual cost is 2 lakh. At 10% profit, you get the sales. Right? So in the cost sheet, you have to be very careful. Production overheads you have to take is the absorbed production overheads. Is it clear, guys? Is the cost sheet clear? Then I will move to the financial books. Then I will move to the financial profit and loss account. Yes, cost sheet is clear. Now coming to the financial books now, financial P&L account. Sale of finished goods is there. Sale of finished goods we have taken 2,20,000. This will remain same. Now you are selling the raw material also. See here the raw material being sold. The raw material being sold 5,000. So sale of raw material we have taken. Sale of raw material. Closing stock of raw material and WIP is there 37,000 and 20,000. Opening stock of raw material and WIP is there. Purchases is there. Wages is given Now here what we will take? Here we will take actual wages paid. Overheads. Here again you will take what? The actual overheads paid, that is 1,25,000. This is your financial P&L account. Opening stock, closing stock, sale of FG, sale of raw material, purchases, wages and overheads. Now we need to find out where is the difference. Here you are getting a loss of 3,000. Here you are getting a profit of 20,000. Now where is the difference? The difference of 23,000. Sir G, where is that difference coming from 23,000? This is what we need to figure it out now. Right, where is this difference of 23,000 coming? Will there be any difference in the material consumption? No. Why? Because here we have directly written material consumed. Here we have written opening stock, purchases, sale of raw material and closing stock of raw material. Right, here we have and there is a loss of raw material also. There is a loss of raw material that is adjusted in the overheads. Right, that is adjusted in the overheads. So finally, so that is all same. There is no difference. I'll come to that. Anshika, I'm taking the next question on memorandum reconciliation only. Right? Next question will take it on memorandum reconciliation. Now, in this question, there is no difference for material. There is no difference for WIP. There is no difference for anything else. Right? The only difference is for the overheads. The only difference is for overheads. I'll tell you why it is not I'll tell you one thing. If you talk about raw material, right? If you talk about the raw material, what is the opening stock of raw material? The opening stock of raw material is 15,000, right? Plus, what are the purchases of raw material? The purchases of raw material is 80,000. So total raw material you have is 95,000. What you did with this 95,000? Sir, 5,000 of the raw material we have sold. That is the sale of raw material. 3,000 of the raw material is your shortage. I'm coming to that. 3,000 of the raw material is in the shortage. 10,000 of the raw material is issued to repairs. And remaining is what? 40,000 of consumption. And with this, the closing balance that you will get is 37,000. Right? So this is already taken in the overheads. Sale we have taken, consumption, closing balance we have taken. If you are taking all these things, that means ultimately you will reach the consumption only. You are taking opening stock plus purchases. Sale you are taking, shortage and issue to repairs we have already taken in the factory overheads. Minus the closing stock, you will get consumption. So consumption 40,000 in the financial books. In the financial books, consumption of 40,000 is equal to consumption of 40,000 in the costing books. Right? So there is no difference in this. Wages 30,000. Here we have taken the wages of 30,000 and remaining 5,000 is taken in the production overheads. So total wages anyhow we have taken it as 35,000. So no difference in the wages part also. Direct wages, there is no difference. Right? In the overheads. Now, how there is a difference in the overheads? Let's talk about the actual overheads incurred. What is the actual overheads incurred? What is the actual overheads incurred? Sir, 1,25,000 is actual overheads incurred, which is given in the question itself. 1,25,000. What else is there in the overheads that should have been absorbed? What else overheads should have been absorbed? Sir, 5,000 of wages should have been absorbed. Yes, sir. Shortage, this should have been absorbed. Yes, sir. repairs and maintenance 10,000, it should have been absorbed. Yes sir, right? So what all should have been absorbed? Should have been absorbed. Add wages of 5,000, add loss 3,000, shortages, loss or shortages, whatever the word is there, add issue to repairs 10,000. So what is the total overhead which is incurred? 1,43,000. This should have been recovered minus absorbed overheads. What is the absorbed overheads here? 1,20,000. So this 23,000 is exactly the difference between the costing profits and the financial profits. You are under absorption. You have taken less expenses in the costing books. That is why your costing books are showing a profit of 20,000, whereas your financial books are showing a loss of 3,000. This is because of the under absorption of overheads in the costing books to the tune of 23,000. Right? Is this point clear? That is why I have taken up this question. The difference of exact 23,000 is because of this part. Please let me know everyone if it is clear. Yes. Rest of the people, if it is clear, please let me know. All clear? Okay. So let's move to the last question. One question will take it on. Memorandum reconciliation. Right? Memorandum reconciliation. Practical problem 5. Now this is your practical problem 5 on memorandum reconciliation. Messrs. HK Piano. Okay, in case of memorandum reconciliation, which the doubt Anshika was asking, that sir, what to do with this memorandum reconciliation? How to record the profits? So for memorandum reconciliation, if there is a profit as per cost books, you will write here profit costing books. We will adjust this profit to reach the profit as per financial books. Otherwise, no hard and fast rule. No hard and fast rule. But normally we write it like this. Loss costing books. We adjust, either we reach at profit as per financial books or loss as per financial books. So this is how we normally start. Clear? Now, Messrs. HK Piano company showed a net loss of 4,16,000 as per their financial accounts for the year ended 31st of March. The cost accounts, however, disclosed a net loss of 3,28,000 for the same period. The following information were revealed as a result of scrutiny of the figures of both the set of books. Now, costing books are showing less loss, whereas financial books are showing a higher loss. Now, see the adjustment. See the first adjustment, factory overheads under recovered. Means what? Try to understand the meaning here. Factory overheads under recovered. That means in the costing books, you have taken less of expense by 6,000. If expense is less, that means your loss is less. What I'm saying, in the costing books, under recovered means you have the expense in the financial books is more. Expense in the costing books you have taken less. You have absorbed less. That is why it is under absorption. Now, if the expense in the costing books is less, that means your loss is also on the lower side. Now, what you should do? You should increase your loss. So when you start with the loss as per costing books, this item you will add to that loss, right? Like you are starting here, you are writing here loss as per. So what is to be done? If you are writing loss as per costing books, right? We are taking the loss as per costing books, costing books, that is 3,28,000. Now with the under absorption of overheads, you have shown the lower loss. You need to increase that loss. So you will add here, you will on this right, you will on this side itself, you will write factory overheads 6,000. That will increase your loss. So the increase in loss will be written on the loss side, debited, and the decrease in loss we will take it on the other side. Let's take the next item, administration overheads over recovered. That means in the costing books you have taken excess. You have taken excess of administration overheads by 4,000. If you have taken an extra expenditure, that means you have shown a higher loss. You need to reduce this loss now. So here we will write by admin overheads. By admin overheads 4,000. Next item, depreciation charged in the financial accounts 1,20,000. Depreciation recovered in the costing 1,30,000. You have taken a higher expense in the costing books. You have taken a higher expense in the costing books. Higher expense means higher loss. So you need to reduce the loss now because we are adjusting the costing profits. In the financial books, you have taken a depreciation of 1,20,000. In the costing books, you have taken a depreciation of 1,30,000. You have taken 10,000 extra expense. Extra expense means higher loss. You need to reduce that loss now. So I'll write here by depreciation 10,000. By depreciation 10,000. Interest on investments not included in the cost. Interest on investment, this is your income which is recorded in the financial books. Which is recorded in the financial books. That means if there is an income in the financial books, your financial loss would have reduced. Your costing loss is here. Okay, let's say these are the costing and financial records. These are the costing and financial records at the same level. Right now what happened? There is an income in the financial books which you are recording. So with the income, what happened in the financial books? Your loss is reduced. Your costing records are here. Your costing loss is here. Your financial loss reduced because you recorded an income. So what should be done? This loss you need to reduce now. So minus interest. So here you will write by interest. How much it is? 20,000. Okay, next income tax provided 1,20,000. Now where would you have provided? Again, financial books and costing books, right? You provided an expenditure, income tax is payable. In the financial books, you have taken an expense of 1,20,000 for the income tax paid. So if you are taking the expense here, that means your loss will increase. Now this is your financial loss. This is your costing loss. So what will happen? You need to increase the costing loss now. You will add here income tax 1,20,000. You will add here income tax 1,20,000. So you have to see a very simple thing, whether your loss you need to increase or whether you want to reduce that loss. Simple, right? Income tax done. Then transfer fees credited in the financial books. Take it as a income in the financial books. So what will happen? These are financial profits and costing profits at the same level. You got a income in the financial books. Your loss in the financial books will come down. Now you reduce your costing loss by 2000. Similarly, stores adjustment credited in the financial books 2000. Same treatment, right? So here it will be by transfer fee 2000 by stores adjustment 2000. So let's see what you are getting. Are you getting the loss as per financial books 3,28,000 plus 6,000? 3,28,000 plus 6,000 plus 1,20,000 minus 4,000 minus. So the loss as per financial books was 4,16,000, which you will get here by loss as per financial books 4,16,000. Any doubts in this question? Tell me, is the memorandum reconciliation account clear? Because preparation of memorandum reconciliation account is important. Another thing is handling the profits is easy, but handling the loss sometimes can be a little bit tricky. That is why I have taken a question on the loss, right? Because sometimes you feel the heat when it comes to the loss part. Oh sir, how to handle the loss? Everything clear? So with this, we are done with the cost accounting systems and we are done with memorandum reconciliation account, right? So tomorrow what we'll do is, tomorrow we'll take up unit and batch costing. That is very simple. I'll just rush through it with half an hour. Unit costing is nothing, batch costing just 1 or 2 questions we have to deal, nothing much, right? Yes, if there is a profit, then it will be inverse of everything, correct? So after unit and batch costing, job costing I'll not take up. Job costing is what? You have to prepare the cost sheet for a particular job, right? Or you just go through with the module. If you feel any question you want me to do, I'll take up. Otherwise, we'll directly jump to process costing, right? Because process costing is very, very important. So tomorrow we'll try to do the concepts of process costing. Yes, any queries if you have in the today's session? If you have any queries in the today's session. So we are done with this. Please let me know if you have any queries in the today's session. No doubt, just revise this chapter. In case you have any queries, we can take up tomorrow also. So tomorrow we'll be doing unit and batch costing, and then we'll start with process costing. Because process, joint and byproduct, standard marginal budgetary service, these are more important chapters, right? So unit and batch is comparatively easier chapters, not much to put in the efforts in that, right? But process onwards, I'll send it Sunday. I'll send it, Vedant. I'm actually not getting time at all. Morning 8 to 1 I'm taking face-to-face batch, then I'm taking office. By Sunday definitely I'll send. I have the mail, I have it in the mind, right? I'll share it with you. Maximum by Sunday I'll share it with you. Right? Okay, yes, everyone else, anyone having any doubts in this cost accounting systems or reconciliation? Else we'll finish the session today a little early because we are done with the target. No doubts. Okay, then fine. See you guys tomorrow, same time, 6 o'clock. Right? Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.